What's up, everybody? Welcome back to Retail Weekly. This is episode 3 now, and this is all about me and Nick over here, Bull Trade Finder or not, going through and finding gems, finding great retail, finding basically the next retail names, right? We've already identified so many, like Hims, Oscar. Me and Knots have, identified some in the past as well with Palantir, Nvidia's, and some other names out there. But yeah, this is all about really just talking about what's going on in the retail space, and obviously with today we have two of our main names, Oscar and Zeta, that have just been honestly this week have taken a big punishing, just getting pummeled all week long. Have had hit piece after hit piece on Oscar, right? And then Zeta it's just been consolidating for a while. And I think actually we're seeing some selling off in Zeta because of the selling off in Oscar. I'm feeling like they kind of go hand in hand, and people are sitting there saying, I'm gonna sell out of Oscar. You know what? Let me just sell out of Zeta too. I'm done. I'm done with these names because I got into them because of hype, not because I actually looked into them or did my own due diligence, right? And that is where, as a retail investor, I'm sure Nick over here has done it whenever he first started. I know I personally did that when I first started. I'm not here to mock you. I'm not here to, make fun of you, anything like that. We're here to help you. We're here to help you and to poke fun a little bit, but also say, it's okay. We've all been there. We've all done that. We've all bought high and sold low because we didn't actually do the due diligence. We didn't actually get that conviction early on, right, in the process when you're supposed to. You're supposed to get that conviction before you buy, not after. So totally understand where you're coming from, and just want to let you guys know that everything in the market is a lesson, right? Everything in the market is a lesson. How you doing, Knots? How was your week?
I'm good. I'm good. It's been a very busy week overall, but good.
Awesome. Yeah, I was I feel like it was kind of a dud week. It was kind of choppy, and I don't know. Just didn't really seem, I just felt like we
Yeah, it
kept
was
on.
pretty choppy.
Yeah.
I agree with that. I actually didn't really trade that much this week. I mean, I had some good trades. It was a good week, thankfully. Other than again, long term, right now, but other than that, it was pretty quiet. It was pretty choppy, and just taking it by ear, just watching what the market kind of gives you, and attack or yeah, I guess attacking it, when I feel, fit to do so.
Yeah. Yeah, I think I had a mixed week. I think I'm down on the week, which it happens.
Mhm.
With some day trades, got caught in some chop. Happens. Um, and then long-term portfolios are down a little bit.
Yeah.
Just overall market is I think it's digesting the tariff news, right? I mean, we keep on getting new tariff news again, and it's definitely not reacting like it was before in April or in
Yeah.
March, right? It's definitely not doing that. Honestly, I'm feeling more bullish about the markets now because
Okay.
they keep digesting the news, and we keep bouncing. We keep coming
Yeah.
back to where we were, right? We have these pockets where, last night Trump announces the tariffs, right, on China or on Canada and EU,
And
and
market drops
we
150, 160.
Yep. And the market went down. And then, we kind of rebounded today back to break even, and then just a big choppy Friday with a whole lot of nothing.
Yeah.
So, yeah, I think it's bullish overall. And then crypto has just absolutely been running. I was fortunate enough to get into Ethereum this past weekend, actually. And yeah, been riding that wave. That was a nice little wave, very quickly on Ethereum, and on a technical basis, I see it going a lot higher from here. Maybe a pullback soon, running into 3K resistance, but yeah, I definitely see it going a lot higher. And
Yeah, things I want to kind of bring up, and again, you kind of brought it up in the beginning there, but
Yeah.
you know, the markets overall. Well, let's just not say the markets. Focusing on the two that you started with, Oscar and Zeta. I mean, nothing has changed fundamentally.
No.
And I've been posting a bunch of things. I know you've been posting a bunch of things. I've seen so many people post a bunch of things, especially for Oscar. Nothing has changed fundamentally. They're still a company growing at 600% EPS this year and continuing to grow forward on the EPS. They're a company that produces $1.2 billion in free cash flow this year, and that's only going to continue. Their revenues are growing at 20% a year. I mean, I have no reason to sell this. I see so many people commenting now, oh, it's only going lower. It's only going lower. Again, if I did the same thing for PLTR, I would not have made 1,000%. And I waited in that for a year. If I did the same thing for HIMS, I would not have made 400% in a couple months.
Yeah.
It's just being patient. Listen, it's if the market goes your way exactly how you want it to, that's very lucky, in all honesty. And yes, it's happened to me many times, but it also hasn't happened to me many times. And you just got to know and be patient in this market, because overall, it is never going to be exactly the way you want it. And once you kind of understand that and learn that, the market is going to become a little bit easier or a little bit better to understand and anyway, maybe get used to or something. But overall, you need to understand that there is going to be dips, there is going to be pops. You just got to take advantage of the opportunities that are given to you. And again, Zeta and Oscar are currently doing that right now, giving you an opportunity. And people are going to be upset when they don't take advantage of that opportunity, just like people are upset when they didn't take advantage of PLTR at 12. They didn't take AMD at 80, Hood at 38 in April. I think it went to like 29 actually, but I got it at 38. I mean, I could go on and on. People were calling me crazy for PLTR for years. I mean, people hate that name and they still hate that name. Okay. And I do have to state it is overvalued, especially where it is now. But overall, there was opportunities. It was a growing company. It's a strong company. It obviously is in a major sector that is revolving around the world right now, AI. And, I had no reason to sell that. I just kept buying it because it made sense. They were growing quarter over quarter. Nothing was changing. And it's the same situation that's happening here. So that's why I continuously talk about it. As a personal investor, a long-term investor, listen, I'm buying those dips. Does it suck that it goes down? Of course, but it's part of the game. You just got to learn that. I mean, I've been trading for 10 years, investing for 10 years, and, you live and learn. And I've learned a lot. I've blown accounts. I've learned a lot. So that's kind of a little tidbit. You just got to be patient. You got to know that it's never going to go your way 100% the way you want it to.
Yeah. And, I think the longer you're in the market, it comes a little bit easier to actually get a little excited, like seeing a dip buying opportunity. Obviously, it's not exciting if, you bought at 21 and you're down a lot right now and you're sitting here and just saying, what do? I didn't dollar cost average. I just, jump full in, right? Because I thought I was going to go to 40 at 21. Yeah. And now we're back to 14 something, right? But again, we can look back at Palantir. I mean, this is a really good example, right? So people were buying Palantir after IPO and it ran up in 2021 to what? 28, 30 some bucks in 2021. Those same people, if they would have held throughout, if they would have just held, like put in the safe, don't think about it, and then held to today, they're up massive, right? But what happened? Palantir went to $5 and like 10 cents, 11 cents.
Yeah.
So they were massively down, massively down, right?
Yep.
Massively. But you have to realize that it's unrealized. Unrealized gains, you don't get those gains until you sell. Unrealized losses, you don't get those gains until you sell. So it's you gotta change that mentality. You really do, because if you don't change that mentality, then I made a post about this, right? Stop. Oh man, I'm sure you've been getting a lot of this too. Everybody in my comments is saying, I'm gonna buy it at 10. I'm gonna go all in at 10. I'm gonna load the boat at 13. I'm gonna load the boat at the gap fill. And remember, I was sitting there and I was like, when I was talking about it before the run up, like a month ago, I think, I was sitting there saying, hey, it's coming down. We could fill this gap at 13 something, right? We could fill the gap. And
Yeah.
we came within like 11 cents. 11 cents. And everybody was like, I'll just buy it right there at the gap. And I'm
Yeah.
like, well, you should probably just dollar cost average. You should probably just get in and then just dollar cost average on the way down. And what happened? Those same people,
yeah,
at 22, at 21, they were sitting there saying, oh my gosh, I can't believe I didn't buy right before the gap. Like, it literally went 11 cents and then said, nope, we're gone. And then we went to 21, 22. And now those same people it's just like it's a ever evolving cycle. It's like over and over and over again. Like, people with Palantir at $5, I'll buy it when it's 2. People with Tesla, when it's 140, I'll buy it sub 100.
Yeah.
Guys, you're not going to get that opportunity a lot of the times. You think you're the only one that's thinking like that? You think you have to realize, like, big investors have to let it go down there. You know what I mean? They have to not step in.
Yeah. Little different scenario, but I mean, same thing. I mean, I'm literally just traded Qs. It was like maybe a few points above, maybe like 20 cents above my level. I grabbed it, and lucky enough, I also just said this a second ago. It's nothing's ever going to go your way 100%, but I somehow just grabbed the absolute bottom, trying to get ahead of my support, because sometimes it never does hit those specific areas. And right there on NQ, I just got about 45 points in under 2 minutes. Like, that was, again, you kind of just said the same thing. You can never expect it to hit a specific spot that you want. And of course, you could always look to buy, the best opportunity, the best price you can. Okay. But sometimes it just doesn't get to exactly where you want. And I'm a victim of this many times over. I mean, it's just who we are as people. But you just got to more so, you just dollar cost average, at least at that point. Like, if you want to buy a 10, let's say,
long term.
Yeah, exactly. If you want to buy a 10, at least add some on a 7% dip today on Oscar, for example. You don't, those are great opportunities to buy. I mean,
this could be the bottom. You don't know. You don't know. This could be the bottom. And people are sitting there, saying, oh man, I can't believe, like, coming at me saying, I can't believe you were buying at 17, 18, 19, 20. Yeah, but I was also buying at 11, 12, 13, 14. So it dollar cost averaging means if I think it's a steal deal under $20, why am I not going to keep buying? Honestly, if it would have kept going up to 25 to 28, I would have kept dollar cost averaging. I would have bought less, right? I'm buying more now than I was. But that's the thing people don't understand is, like, I'm looking at the dollar cost, this kind of cash flow model. It's 75% current margin of safety. 75% current margin of safety with, like, beat up numbers, like the growth is crap, the margin rates are crap. It's taking in it's taking in less margin, free cash flow margin rate than they're doing right now, and that kind of hedges against the whole idea. And because I had a couple people talking to me about their free cash flow, it gets more things taken out of it because of the healthcare realm. So I actually ran those numbers. So the billion in free cash flow that they have is really more so about 500 or 600 million actually, but potatoes, because even running those numbers, it's still a crazy steal deal, even after you take out those extra costs, right? When it comes to healthcare and health insurance. So yeah, it's just crazy. Like, I mean, at today's prices, we're getting basically a 25% annual CAGR rate for DCF, and then a EPS of 19% annual CAGR. The market returns 8 to 9% per year, on average. In this company, you're gonna get, with the most beat up number. This isn't the bull case. This is like the bear case. And one more thought. So the BBB stuff happened. What happened over this past weekend, right?
BB,
Oh,
yes.
yeah, the big beautiful
Yeah,
bill.
like late last weekend. Yeah.
Yeah. So that passed, right? And then the Centene, whatever they are, the health insurance company, they got beat up and plummeted because they lowered their guidance. Well, Oscar then plummeted as well, but then rebounded. And now they're going lower throughout the week because analysts came out and basically said, "Oh yeah, like negative, negative, negative," right? And what people don't realize is price follows, like the news follows the price, right?
Okay.
So when
Yeah.
the price starts falling and one little thing, like you stub your toe a little bit and one little negative thing comes out, everybody piles on board, right? Because everybody wants to look like a genius, right? Oscar's going down. The analysts know that it's a big retail name. So what are analysts going to do? They want to make a name for themselves, right? So they go on and they type up their little thesis. Maybe use a little chat GPT. They type up their thesis and say, "Yeah, this company sucks. This the this risk, that risk, it can all go wrong. ACA, all the stuff that we already know we've been talking about. All the stuff we were talking about when it was 20 some. Like me and you aren't permables. We were telling people like, "Hey, here's the resistance." I was showing the resistance. I was sitting there out. I was sitting there after the BBB news, after the bill passed, and I would put out like 10 posts on Sunday talking about how this could negatively impact Oscar and we could get a massive pullback. And then we got the pullback because of the Sentient news when they pulled their guidance, right? And then I was sitting there like, I was calling this to happen, and then people were like, "Oh no, it only happened because of the Sentient news." And I'm like, that's just not true because what's everybody talking about now? Everybody's talking about the big beautiful bill, right? And how it impacts Oscar. So it's just funny because it's like yes, Sentient News was part of it, but it's also the big beautiful bill and how it's going after healthcare. But again, it's mainly Medicaid. And yes, the ACA subsidies, not all of ACA. That's where people get mixed up. They're not losing all of ACA. They're not just like taking that 90 some percent revenue in ACA and just gone tomorrow. It's the subsidies, which is the federal government helping out people, help them pay for health insurance through ACA subsidies. Those subsidies expire at the end of this year, right? But it doesn't mean those people are going to cancel because they have to pay for it. It's either they pay for health insurance or they don't have health insurance. All the Medicaid people losing like all those Medicaids, like all the Medicaid with the cuts to Medicaid, they have to go
Yeah.
somewhere. They have to get
Yeah.
health insurance. They're either going to do it through ICRA or ACA. Like this is what I'm talking. This is what we're talking about. So like you have to understand the company. You have to understand, what's the worst case scenario and how it's already priced in. Even more so now. I mean, we're at $14.38. We were just at $23.79 at a high, and the low is $11.20. We're at what,
Mhm.
$3.6 billion market cap. They pull in 9.2. No, they pulled in over 10 billion trailing 12 month right now, over 10 billion in revenue. And I
Yep.
understand it's a health insurance company. I understand that they have to have this cash on hand for all the claims, right? Because they got to pay once you get care, they got to pay for an MRI or whatever, right? I understand that. We get that. We're not idiots. Like, I mean, people say things in the comments, and it's just like, you think we don't know this? Like, why would I be sitting here talking about this company so much or have so much of my own money invested if I didn't know this stuff, right? If I didn't do my research. Like, oh man, it's crazy. It's crazy. I know a lot of people out there invest like that. They just see something and say, yeah, it was here, it was at $100 before, so it'll go back. Like that's not how charts work. That's not how stocks work. But yeah, man. What's your take on all that?
You look at the big beautiful bill, and I think honestly, in a way, like the ICRA stuff, do you believe it kind of helps Oscar in a way?
Yeah, and I made a post about that actually.
Yeah, I feel the same way. I actually think it helps Oscar in a way. people are looking at it in like a bad way. And I don't think we should. I really don't. I think it's better than what we're kind of thinking or people are thinking, it is, personally.
Yeah.
I mean, I have a lot more to look into on that, really, but I really think it's a lot. It's not as bad as people think. It is the best way to put it.
No, and if it was, right, I mean, under promise, over deliver. That's like the
Yeah.
theme on Wall Street. That's as when you're a CEO, that's what you want to go after. You don't want to over promise, under deliver, because then you're just going to get smoked, right?
Yeah. You're not wrong. Not
And to
wrong.
this point, Oscar has been under promising, right?
Mhm.
They haven't been over promising. They said, yeah, ACA, yep, all this stuff. But here's, our 2027, and here's how we're going to get through this.
Yeah. Not wrong.
Now, why would they say that, right? And why would they put that out there? While currently under an SEC investigation for misleading investors back in COVID times, right?
Mhm.
Which complete fallacy there, because they're talking about, basically it got drawn up in like, oh, well, they misled, saying, for guiding for this, but then not hitting that. Well, no one knew what COVID was going to bring. No one knew what was going to happen there. So, I mean, come on, give me a break. Like, nobody knew what was happening with COVID. So with that, right, with a current investigation, now, could they be that dumb? Could we be this wrong on like their management team? We could. And
Yeah.
they could come out and then they could just be like, yeah, actually we said all that and then we take it back. And obviously that would be a big game changer. I'm sure for you too, right? Like if they came out and they said, "Hey guys, actually we're a bunch of idiots. We we put out that we were going to be fine after ACA subsidies and actually we're cutting our guidance by like 70%." Like if they did something like that, then yeah, I mean they're just smacking you in the face and saying, "Hey, look at us. Like we are very, very
Yeah.
poor management." And that would probably get me to just the fire sale that.
Yeah.
I'll be totally honest. Like we're not hopium over here. We're not like sitting here like everything's perfect, rainbows. Like that's not how this stuff works, guys. Like, but guess
Yeah.
what? If the leadership doesn't show you that's the case, then you can play the what if game all day.
Yeah.
Elon Musk can leave
carefully
Tesla
said.
tomorrow. What if? They continue to power through, right? When I was in Tesla back in 2017, 2018, right? What if it doesn't work? What if it doesn't make it, right? If you would have listened to analysts on Tesla back in 2018, 2019, you would have not been a shareholder and you would have not had over 1,000% gains.
Yeah.
Like I did.
Hold on, I have to chime in for 1 second. The best thing you
Yeah.
posted today was literally that guy's what's it called? His rating.
Yeah.
Analyst rating, yeah.
He actually has a good rating too. That's
No,
the
the other one, the bad one.
Oh, the other one? Yeah. Well, the other one, I was like,
Yeah, it's
me
pretty
versus
decent.
him.
It's
I
not
showed
bad,
I showed my returns in one of my private portfolios. And his he has good stars and ratings and stuff. He's probably a really nice guy and stuff. I don't not like him, but he put a hit piece out on Oscar, and I looked him up, and like he's got 9% average returns on his calls. It's like, okay, like that's not that good, brother. Like that's barely beating the SPY, man. Come on, what are we doing here?
That's not that good, brother.
Yeah, I mean, I was like, I want to see this dude's 5-year returns. He's in that field too. I looked at his calls, and it's like all like a bunch of companies I don't even know. It's a bunch of healthcare. It's all healthcare. I'm like, okay, but yeah. So, did you see my post today about we'll know we bought them once I start getting a lot of hate?
Sorry, 1 second. I had to check this.
You did.
Say that one more time.
I said, did you see my post today about we'll know that we bought them once I start getting a lot of hate? on Oscar?
Let me see. I said something about the same thing.
Because it's so true, right? So it was back in it was end of last year, beginning of this year. I was calling out Mobileye at
Okay.
$11, and we ran to 20 some dollars. So it's very, very similar to Oscar actually with the price movement. We were at $11 and some change on Mobileye, and I said this company is like top 3 along Google, Waymo, which is Waymo, and Tesla. And I had my whole bull thesis for it, and they were similarly undervalued, very undervalued for what they were doing with their LiDAR, right? And their drive assist, and then all the things that they had coming up to basically expand and get into more of the robo taxis and self-driving, right? I saw the opportunity. Was calling it at 11, 12, 13, 14. It went all the way up to like 22, 23, something like that. Massive double up. And then what happened? It took a crap, especially during actually 28, almost $28 it went to. So we went from like 1048 up to 28, and then we dropped from 28 down to like 14, 15, and then April lows was back down to like 11 or so. And then I was like, I'm still in this thing. I still like this. I took some trims up top or whatever. And then we climbed right back up to like 18, 19. Now we're down to 16, whatever. Like people just don't realize like you gotta DCA. Like I don't know.
You just gotta
like if you go all in, you go all in after a massive run, you're just asking to get just like hurt.
Yeah.
Like your stomach's gonna hurt because you bought Mobileye at 27 and it went all the way back down to 11.
You're not wrong.
You bought Oscar at 20 whatever, 22, and now we're back down to 14. Like your stomach's gonna hurt. But I posted, a thread the other day on about basically, when that happens, as long as you got your conviction, like you buy more. It's on sale. You get more shares for less money.
Yep.
So
not wrong.
Have we received enough hate? Somebody asked me that today. Is like on a scale of 1 to 10, what do you rate the hate that you're receiving? And I put it like a 4. I'm not getting that much hate, honestly. I'm getting more like trolls,
Oh yeah, saying
the Einsteins, right? Oh, well, I bought it this and I sold perfectly here and I knew this was going to happen. It's like, okay, then you were a trader. Great. Good job. Nice trade. Like, and that's, like there's trading and there's investing. 2 different things, 2 completely different things. If you entered Oscar as a trade and then you sat there and said, actually, I really like this as an investment, and then you sold after this dip and you didn't take any gains, then you're doing it wrong, right? If you get in as a trade, it's a trade. It's not an investment. You can't get into it as a trade and then be like, actually, you know what? There's an investment. Why? Because you didn't get into it in the beginning the right way. You didn't do the due diligence of an investment on the fundamentals, right? You got in it based off probably solely technical analysis and momentum. You're seeing a lot of it on X. You're seeing a lot of people post about it. How many people were posting about it back in February? How many people were posting about it in March and April during the absolute lows when it was at $11.20? Me, Knots, and TLI.
Yep.
The long investor.
That's true.
I'm sure there was more, right?
Oh, there always is.
But the loudest accounts, I would say, were us, right? So I guess we can move on to Zeta now, right? I think we talked enough about Oscar.
And again, that's another one that's beat up.
Yep, Zeta got like I think 4 or 5% move down today.
So I have 50 SMA right at 1390. Ooh. I also have a level at 1390. So it's actually
6.5% down now.
Yeah.
Let's see.
I'm looking for a buy here at 1390. And I'm probably going to nibble some now, like we just talked about. We're at 1397, 1396. I'm 6 cents away. What's the point of not doing it? What is 6 cents really going to change for me?
Yep. Okay, yeah, Oscar's down at 7 7.5, and Zeta's at 6.5. And I'm sure you're seeing the same thing, right? So I post the charts on Oscar, and you do the same, right? And they've been looking really good. But here's the thing: when you get multiple hit pieces, and you look at a HIMS chart, right?
Yes.
How hard is HIMS to do technical analysis on?
Oh, dude.
That is like one
I mean,
of the hardest stocks
yeah.
to do
I
technical
mean,
analysis on. It's like, here's a cup and handle breakout. Actually, there's also just all these zigzags all over the chart.
here's a cup and handle gap breakout.
Yeah.
Gap.
Yeah, gaps everywhere, and like that's what these names are. So they're really, at the brass tacks of it, levels. Levels are the best way to really see where this thing can go. With HIMS and Oscar and Zeta, levels. I have my indicators and stuff like that, and everybody else has their indicators, but a lot of indicators rely on like some steady momentum.
Yeah.
Any indicator, when there's just tons of back and forth, RSI, MACD, stochastic, Williams percentage range, it doesn't matter. Moving averages, probably a little bit less, right? Those are more solid, especially on the weekly time frame. Like, those really help. But right now, the charts look super bearish. Right now, the charts do not look good, and right now I'm looking at it. They broke their uptrend line on the daily too.
Yeah.
But here's what I'll say: how many times have we looked at HIMS?
Yeah.
And basically, HIMS looked like it was going to go lower, and then all of a sudden, out of nowhere, it just shot up, right? And that was bottom. So here's the thing, right? And here's what everybody keeps saying: I'm going to buy down here somebody literally said sub 10. Somebody literally said sub 10. That's 1105. That's 1120 is the low. 1120 is the April low. And you're going to buy at 10. Maybe. But you know much has to, like, they literally have to come out and pull guidance. They 100% would have to come out and pull guidance. They're so undervalued here. Even up here, they're so undervalued. So, yeah. I don't see you buying at 10 unless we get the market correcting, right? With this bad news out there, because they still crushed their last earnings.
Yeah.
They crushed their last earnings, and they're forecasted to crush these earnings. 24 cents and 2.84 billion. Last time they did 16 cents guided and 2.13 billion, and they beat that. So almost an extra billion in revenue. Almost like 0.7, right?
Yeah.
And then an extra 8 cents on EPS. So, yeah, and this is what I was talking about, right? With these types of stocks, you see how back and forth they are. Like, you get breakouts and then you just you shoot down. You got to just focus on the levels. And look at the levels I drew up here. Is it not kind of just perfectly? You had your resistance. You almost hit your resistance, then you went down. You had your dip. They had your previous resistance, which I was expecting this to hold, but that's before all the hype built. I didn't expect the hype on this stock to build as much as it did. I'm sure you didn't either.
No.
And yeah, this was the dip buy box, and I basically just saying, okay, we're up here. This would be a great spot to buy with all this previous resistance, flipping it to support. Well,
Yeah.
You got a bunch of people capitulating now, and I do believe we were getting close to a bottom. Because now you're down 8%, 8%, and you're down what? In the last 2 weeks, you're down 33%. 33% in the last 2 weeks. I think we're getting close to a bottom.
Yeah.
You have one last gap fill right here at 1331, the one that we were talking about earlier, where it came down to 1357. And the gap fill was actually 1331. And then people were saying, well, this wick high here, that's actually the gap fill, blah, blah, blah. Right. But yeah, if you look at it, you had your resistance, you had your dip buy box, and then you have your area where you you do a second mortgage on your home to buy more Oscar.
Yeah.
And yeah, if we get down here, I would definitely sell out of some other stocks, raise more cash, and buy more. I already have a ton,
Oscar.
but yeah, I mean, I could have a lot more. Down here, it's just silly, man. I mean, we're talking about like what, a $2 billion? We're talking less than a $3 billion market cap for a company pulling in over $10 billion.
Yeah.
Even if you want to sit there and say,
And
okay, they don't make $1 billion in free cash flow, they only make 500 or 600 million. Still, come on.
no, they do. Wait, aren't they? Or they're guiding for this year 1.2 billion. Am I correct?
Yeah, but so like the way their free cash flow works with the health insurance industry, there's
Okay.
additional things you have to take out.
Okay.
Again,
Maybe
even my high five snapshot, man, it takes that into consideration. So it's something somebody brought up to me. But yeah, it's still, yeah. We're supposed to be talking about Zeta. That's my bad. How can we not just talk about
Zeta? That's not it.
How can we not talk about Oscar? I mean, it's the hottest thing right now. Literally, it's so hot because it's so red.
Yeah, it is. It is so
But
red. People are freaking out.
I'm up to like 70% of my Roth IRA in Oscar right now. Yeah.
You're a bad boy.
Yep. And the thing about Roth IRA, man, is like, well, I do a traditional and then I transfer it over or whatever. But that's another story. You only do like 7K a year, and I just started it like a couple years ago. So I'm basically to the point. I'm like, yeah, I want this to grow fast. So I'm gonna just go single Oscar basically. I have Oscars, a little bit of Zeta. I got some DJT in there, and then that's just like a trade. And then I got a bunch of. Did you buy those leaps? I bought leaps today in Oscar. I bought 2027 leaps.
I didn't. I have March 2026. I don't have Luke commenting. I don't have 2027 yet, but I actually really should. I might wait till tomorrow, or I should say Monday, but might give it a day. Let it breathe.
Yep. So I went in. I bookmarked some comments, so I can always remember. I can always remember once we're back at 20 plus.
who to target?
Yeah. Like, remember you said this? Like, give them the classic. This age like milk.
Age like milk.
But
for anyone who doesn't know,
Zeta's down too. I think I don't know. I think Zeta's just down because Oscar's down, and honestly, the market's down today. IWM really. The Russell's taking a breather, which rightfully so. The Russells ran a lot in the past month. Did you know the Russell's actually outperforming the QQQ and the SPY this year?
I could see that. It has been very strong, personally.
Very
so
strong.
I could definitely see that. Yes.
The genius Tom Lee was calling this out. Remember, end of last year, beginning of this year, he was like, IWM is going to go on a massive roll and bullish ride. He was calling that out last year for like, it didn't come. He was a little bit early.
Yeah.
So what? I think it's still. I think it still runs a lot. I think 250. We're at 222.
Yeah. It's very possible. I mean, IWM has been lagging for a while now.
Years since it topped. Since it topped.
It's true. It is due. It is really due. And it is this time it says, okay, it's my time to, step up to the plate and start batting. This could be it. Who knows? We're gonna find out.
You can tell it's about to just explode higher because crypto's starting to go. So people are going risk on. Tom Lee called it out. He basically said, we're back at all-time highs now. So it's the start of a new bull market. So now hedge funds have to go risk on and they have to get more risk averse go more risk on. So they're starting to buy into IWM, and it's the cheapest. They're the cheapest stocks out there. Mid caps and small caps are the cheapest stocks out there right now. So that's why you see like every other week or every other day, it's like a new name is just flying like 50% or some crazy, or 10-20%, like Archer, and then ONDS,
I saw Archer,
I
yeah.
think. Yeah, ONDS went flying after the drone news. I was in RXRX and VKTX. I was in those. Those started going flying. Like biotech started going flying. I think those can fly some more. Yeah. So it's just, we're starting to really we're getting a pullback today or this week kind of in IWM, but I think then we just continue higher on the IWM. I mean, it just has so much room to run.
Yeah.
Not a lot of people know this, but when you get a bull market, typically it wraps up. A bull market wraps up when the IWM goes on a massive run and catches up to the SPY. It never catches up to the QQQ, but it catches up almost to the SPY. And then that's the signal for a top. It's exactly what happened in 2021, 2022, right before the bear market hit.
Okay.
Remember, everything was like euphoric and everything was crazy. People are calling things euphoric right now. And I'm like, no, I'm sorry. That's you must have not been investing in 2021 and 2022, because 2021 and 2022, that was some euphoria like I've never seen before. But are Oscar leaps good to buy right now? The best time to buy leaps is when everybody, a lot of people hate the stock, people turn on the stock, and
Like right now.
it's very red. You don't want to buy leaps at all-time highs or whenever everybody's talking about it. Right? You want to buy leaps when a stock goes from 22 to 14.
Yeah.
It's
true.
$7
And like I said,
right
Zeta just hit. I think it actually hit. No, it didn't. It hit 13.93. I'm gonna buy some shares right now. I'm looking at. I'll do this live with the boys. Someone's calling me. Hold up. Doing it live with the boys. Can you guys see that? I don't know if you guys can see that.
Oh yeah.
100 shares.
Swipe it. Got it.
100 shares at 14.01.
Let's go. I need to make my yearly deposit in my Roth or thrift and then send it over so I can get more cash in there. But I'm going to pull up the Zeta chart, man. I mean, this is another one. We broke out. You have this large support area, right? We broke out here. We ran up. We ran from 13 to 18, and now we're cooling off, coming back here to 14-ish, right? But my indicator still has a buy signal, and we still broke out of this downtrend. So whatever happens in here, that's cool, as long as we don't go down back, as long as we don't break this low of 10, and we're going to be good to go. And this thing eventually is going to launch off this volume shelf and higher.
Yeah.
So your fair value is 26 on this name. Yeah. Zeta looks good too.
It is setting up. Again, it dipped. We got to just take advantage of it when it comes and go from there. There's really no other way to put it. Really no other way to put it.
It's just another name. I mean, they're expecting growth in the high teens to 20%, and that's again beating it up, and not really like a lot of people think they can do 20% growth in the next 10 years annually. Yep. And if we punch that in there, then this gets a lot crazier from 26.
Yeah.
Right now we're doing mid to high teens, and we're still with a $26 fair value on discounted cash flow model. If you look at current year EPS for 2025, I mean $17.27. So you're undervalued on EPS basis too. Next year it's 22.62. So
22.62.
Yep. I just put it in here, man, and I sit here and I say, look into the company, I sit here and I say, okay, is the risk really that high that deserves to be this undervalued? And if the answer is no, and I like the company, I like their trajectory, then I'm in. Like, it's the same thing with Oscar. It's the same thing with Zeta. It's the same thing with D Local, right? 49% margin of safety, $21 fair value, currently $10.96. No one talks about this one, really. Nobody. But look at this. Again, mid to high teen growth, and I think they can grow 20% plus over the next 10 years. It's just another name that.
Which one is that?
D Local.
Okay, yeah. I know a lot of people have talked about that one. The only thing I don't like is I don't like invested in it. It's from Uruguay, right?
Yeah, it's not a U.S.
I would
company.
say that's the only downfall that I don't like.
Yeah, I agree. Yeah, investing in companies outside the U.S. is definitely carries more risk, and U.S. companies are just obviously more dominant. And that's not because I'm in the U.S., right? It's just like factual. Like, I mean, look at the biggest companies in the world. They're, the NVIDIAs, Googles, Microsofts. Yeah. So
no, you're not wrong.
Yeah. I mean, these are all crazy undervalued. And again, it goes back to what I was just talking about. Your mid caps and your small caps are where you can find the most value. The time to find the value for your large caps, your mega caps, your tech companies, your Mag 7s, besides Google and Amazon, I would say, those days are over. You missed your chance in April. I mean, you missed your chance in April. In April, that was just stupid. Stupid. I think I got Amazon like 150, 160 in April. Like, what? That's insane. That's insane.
Like I said, I have some great buys in April as well. I mean, it is crazy.
Yeah, it's wild. One of my best dip buys ever though was Meta. And I got and it wasn't even I didn't get it 88. I got it like 100. And that's why it doesn't matter. People are sitting there like, oh man, like okay, I got an average cost basis of like 100 and some on Meta, but it went to 80 some. Oh no, I didn't get it at 80 some. It's $700 and some today. Do I really care if I got it 100 or even 200 or at 88? Yes, that's more money I could have made, but like, come on, like you can't time the market, guys. It's just like it doesn't work like that. It doesn't work like that. Nobody can sit there and time the market like that. Nobody. I don't care what they're telling you or selling you or whatever, they can't. Okay. That's why dollar cost averaging has been the best thing you could ever do. I do it a little bit different. I use the margin of safety you guys see. So I only buy a company when it's 20% margin of safety. And then I increase that all the way down to 50% margin of safety. Because typically you're not going to get a company that goes over 50% margin of safety if you're doing conservative numbers. So that's how I do it. I basically do a starter position at 20%, and then I start increasing it every 10% more margin of safety. So
I like that. I honestly like that approach.
Yeah. I think DCA or margin of safety, or like I even do like both, because like I did that, and then I had some cash left over, and like the market's been running up. So it's like, okay, well, I find some other investments, and then now it's like, okay, well, I don't want like a million stocks. So now I'm just going to DCA every month or build up cash to 30%. I think right now is a good time to start building up like 30% as we continue to run higher into all-time highs.
Yeah.
And me and Chris were talking about this yesterday. Me and him were saying the same thing. When the IWM catches up to the SPY and we get that blow off top, I might just sell out everything. I'm not even joking.
So it's when it catches up to the SPY, you're saying, correct?
Yeah, when it almost catches up to the SPY, like the IWM has its blow off top, it has its big move. Yeah.
Okay.
I would never advise to sell out of like your good cost basis long-term investments, but like trades and stuff like that. I mean, yeah, I'm probably gonna start only day trading when we get there, because swings and long-term trades are probably gonna get blown up.
I do have to hop off here.
Yeah. I think it's been.
I have to go do something.
Go watch the kiddos.
Yeah. Last thing I want to say, again, I just want to reiterate, making money in the market, it's just all about patience, timing stuff. And again, you're never going to be exact, and you can see that here. You can see that in years past. I mean, if you timed April, look at what you could have made. Some of these names are up 150, 200% since the April lows. So like Hood, I mean, Hims was up that at one point.
Nvidia is almost up 100% because it was at 90.
Exactly. AMD.
Nvidia. It was a freaking like it's a $4 billion, $4 trillion company.
Yeah.
And they were down to like what, 2 point some? You doubled your money on a Goliath, on the biggest company in the world. Like, what are we doing?
Meta went from
500,
740 to 479. Now it's it hit 750 again.
They're gonna be over 1,000 before you can blink.
Oh yeah, they're gonna split soon. They're gonna split soon
after this next earnings. Yeah, if you guys want like safer names, like not the Oscars and stuff like that, there's definitely risk with those. Obviously, they're not moats. They're not like big, huge companies. I mean, I think Google, Amazon, and Meta, I think those are still like really reasonable prices right now for like the next 5-10 years.
Yeah.
Like those are like easy. Like, in my brain, those are so easy. Like you want to double, triple your money over the next 5-10 years.
Have the opportunities there. You just got to, just got to take them.
But cool, guys. We're going to get out of here. Another great retail weekly. I know we mainly talked about Oscar, but that's our number one right now in the retail community anyways. And we're not right yet. We can't even say we're right until like probably like 3-5 years from now, until we're like 10 billion plus market cap.
Yeah.
Yeah. Long-term investing, guys. But appreciate you guys all tuning in. It was awesome being here with you all. Have a great and awesome weekend, and we will catch you next Friday, same time, same place. See you in the next one, guys.
I'll catch you later. Ronnie, I'll catch you later as well.